Hi guys, sorry for the delay. Can you all hear me? Okay, so let's get started. So hello everyone, and thanks for joining in. I'd like to introduce myself a bit. I'm a lawyer who turned into a full-time smart money trader, and of course, like all of you out there, I've had my fair share of failures, trial and errors, long hours of not understanding what to do, and a crazy amount of screen time being spent figuring out how to make it. So, after all the struggle, I finally was able to create a system of my own with my understanding of price and its behavior. Then, with combine that with smart money concepts which have helped me acquire an edge to be profitable and truly consistent. I can go on talking about this for hours at a stretch to anyone who has equal passion, but that's not what we're covering in today's life. So, just to make it short, I just want to discuss what today's live is going to be all about, and it's going to have these topics. The first is what is smart money, and is it truly important to know smart money in order to how to trade? Second is why do I personally trade smart money? Then we'll move on to having a trading system, which is the lifeline of your trading career. What comes with the trading system is also psychology, which again you have to master in order to be the jack of all trades when you're trying to become a full-time trader. And I will also move on to explaining why I trade forex and how different kinds of market operate in different types of manners and how you can go about making a trading system in different kind of markets. And to end it all, we'll have a small discussion on what the future plans we have for smart money cult and also a few questions that I'll be taking. So let's discuss smart money. So smart money is nothing but it's not complicated at all. And some people try making it complicated, but the easiest way to understanding smart money is that it is nothing but identification of footprints that are left behind by institutions or market makers that we try understanding in order to understand the behavior of price and the flow of price and order flow in certain areas. And these areas could be of interest to you in order to take a trade, or it can just help you analyze price better. Depends on what you're looking at. Secondly, smart money is honestly all about riding the trend and riding the trend in a fashion where you enter before the institutions actually begin the markup, which is the move, and exiting right before they start dumping their positions. So that's all it is about. Smart money, there's nothing else to smart money. The understanding, the behavior of price is all that matters. Nothing else honestly matters. And be aware that trading system is not a part of smart money in itself. That's something that is totally up to you. So next, is it important to know smart money? I don't think it's important to know smart money at all. Because if you're a trader and if something is working for you, be it retail or whatever kind of trading strategies that you're using for yourself, then all you have to do is just stick to it. You just have to stick to it and you just have to keep going on and on. That's all. And if you're like me or like others who trade smart money, you know that you have not maybe found your consistency in retail trading, or you just have a lot of interest in the subject and you want to basically not miss the behavior of price that is happening on the charts and maybe potentially catch huge moves catch these huge markups even before they actually start to begin, then it is going to definitely play a vital role. Now, this is what smart money is all about. There's honestly nothing else to it. And one more subjective question is why I trade smart money. A lot of people have asked me this question, and I want to make it very clear that trading is genuinely my passion, and I clearly wanted to understand the depths of it and how the market makers operate price at any given level on the chart. You see any of these levels or anything for that matter on the charts. I wanted to understand why price was behaving in a certain way wherever I was looking at it. And to be very honest, retail did not provide me with the kind of confidence that I wanted, and where I could understand why things were happening in the market. Trading, according to me, is not just about drawing these two lines and then taking trades. I wanted to understand why it was happening and why, the market was moving the way it is. And retail initially did work for me. Retail concepts definitely did work for me, but most of the times I realized that I was catching a move here, whereas this has already happened. So, how do I get involved in these areas? Or how do I get involved in these areas where I can potentially catch a huge move instead of maybe catching something like this? So, that is very subjective. If you think something like this is working for you, or you're happy doing this, where you're maybe catching what 0.7 hour and you're happy with it, and most of the times I know you're not going to book your profits in this, but if it is working for you, then smart money is very subjective. Why I trade smart money is clearly for this reason, that if this is the demand zone that I'm looking at, I know these liquidations are going to give me enough entries so that I can ride this entire move, whereas I don't have to be worried about the downside at all. My downside is clearly protected. And even if you don't know much about smart money and you're just taking risk entries for that matter, a risk entry is something like this where you just trade the demand zone, you're catching this. So, this is what I wanted to understand. So, the huge difference between trading smart money the right way, and trading retail. So, whatever works for you, and this worked for me. Then, to come to a conclusion of how I was going to, trade the way I do, I started realizing that around the areas, what we call demand and supply zones, say, just for example, you take this, delete this off, this is a demand zone, this is a supply zone. So, when the price approaches a demand zone, I started noticing that there were major liquidations happening. And these liquidations never gave me entries in retail. I could never find any of the entries. So mostly retail traders never trade the bottoms or the tops. You will never look for a long here, like this area. So I started coming up with my own understanding of how prices behave in such areas. And I figured that most of the action happens in a top or a bottom. That's all. And if you can get in these areas, then maybe you don't have anything to worry about. Then your downside is protected. If your risk is well managed, you don't have any problems. You're just going to ride the entire trend, and what is going to ignite the entire move are these two zones. That's all you need to focus on. So you don't need to draw patterns, you don't need to do any of that. And that, according to me, was very convincing, since I started finding answers from my observations. And slowly I started digging into resources, found out how the Wyckoff schematics unfold in the market, and that's basically how I got into trading smart money. There's nothing I would honestly choose over smart money. So that's concluding why I trade smart money, since most of you are asking me that question on my Instagram. Now, moving on to the next part, this is the most important part, and this is okay. Oh my god, this is a trading system. You need to understand that if you have not achieved consistency or profitability in the markets, there's only one reason for that, and the reason is clear enough. Whether you like to believe it or not, it's this trading system. Trading system is something that people don't take into consideration. What I mean to say by that is that simply just taking this supply zone, this market supply zone, what do you actually do when price approaches your zone? Now, this is a supply zone that you're looking at. It's a daily chart. Obviously, it's a higher time frame. If the price if the price is here and it's reaching your area, what do? The truth is, most of you will not have the answer because you will want to do everything you can because you all you know is that price is reaching a supply zone and you're going to go short. That's all. Or maybe you have your different entry criteria that you're looking at, but do you have that one set entry criteria that you use every time? Ask yourself that question. And if you do, then I don't think you should have any problem achieving consistency. That's where trading system comes into the picture. You are most likely going to fail if you do not have a well tested trading system. And honestly, trading without a system is like going to a battlefield without ammunition. Your weekends should consist of back testing and front testing the entire system. Take 500 trades, take 1,000 trades, just keep going and just keep journaling all your trades. This is heavily going to improve your confidence in trading. And secondly, the most important part is this psychology. It's something that everyone struggles with, and I did, and most of you do. A lot of people again message me regarding this, and that's why I wanted to discuss this in depth and how you can work on your trading psychology. Now, understand that if you have a trading system, half of your job in psychology is already done since you know what to expect. Where majority of the problems start occurring in trading is when you don't know what to expect. That's because you have different entry criterias. You don't have a system. You're just going on about trading zones. And if you're doing that, once in a while you're just going to see your profits and close a position. You're just going to see your loss and be demotivated. So what you need to do for that is sit by yourself with a book, pen and paper, and ask yourself these questions. Where do you want to be in a month, 6 months, a year, 5 years, or 10 years when it comes to being a trader? Second, what kind of a trader are you? What are the trades that you're looking at? You should not be looking at trading everything that you see. You should not be looking at trading something that does not fit your criteria at all. Are you a scalper? Do you like swings? Do you like building up positions? Do you like small trades, small risks, or do you have a criteria where you're booking off majority of your profits at say 4 hour, 5 hour, or a certain level? You need to point that out towards yourself because if you're a swing trader, you're going to be just looking at taking swings. Of course, you can always improvise and make a different system for intraday trading or whatever you want. Thirdly, are you happy with what you're doing? If trading is just a sort of money making method for you, then and you're not making money out of it, then it is usually going to disappoint you. And when it starts disappointing you, you need to ask yourself one question: are you happy doing what you're doing? And if you are, only then you're going to improve. You're not going to improve if you're not happy what you're doing. Then just focus on what you can do to reach your goals. If you know price is hitting a certain level, if you know price is hitting a certain area that you've been looking at for far too long, then make sure that you make something out of it. Don't let it go. And if it's a part of your trading system, you should not be missing any trades at all. Then, lastly, just write down what your goals are. These things are going to improve your trading psychology a lot more than you can imagine. And this is about the main focus of today's live. where how you can make a trading system, how you can help with the psychology bit a little bit, and that's that's there. Now I'm going to tell you why and how, when you're operating in smart money, how you're going to be liquidated left, right, and center. Now this is a demand zone. If you look at these candles here, these candles are major liquidations, and just this is just preparing you for smart money in case you're already not taking smart money trades. If you are, then you know what I mean. You're going to be taking a lot of stop losses. Some people maybe will not be taking a lot of stop losses. If you operate on a very low time frame like I do, you might be taking losses before you actually get into moves. But when you start getting into moves, you're catching this, or you're potentially catching this, exiting at liquidities and just carrying on your positions. So just prepare yourself psychologically to understand that liquidations are going to happen. And as liquidations keep happening, you need to understand and you need to prepare yourself for the next entry, because you have your bias in check. You know how the market is operating. You know what you're looking at. You Before you get into a trade, you know where the liquidity is. When you're getting into a trade here, you know this is the liquidity, and you know it's right for you to aim that. That's why if you see, all these are just stop losses. All these are just retail trend lines getting liquidated here, leaving an imbalance behind, and this imbalance is traded in through, leading to this move. So that's what smart money is about. But to master smart money, you need to master this, and to master this, you need to have this. So it's all related to each other, and it just goes hand in hand. There's no shortcuts to it, and you just have to keep doing it again and again, again and again to actually reach a certain level. Now, coming to the next topic of discussion is the different types of markets and why and what kind of market I trade. So, firstly, I started out with the Indian markets, then slowly started moving on towards cryptos, moving on. Then I moved on to Forex, and I just found out that Forex works the best for me, since whatever my understanding of price is, and whatever the way I operate in the market goes hand in hand exactly the way I want it to, only in one market, which is Forex. But that does not mean you can't trade any other markets. If you see my stories or my posts, I keep trading whatever I see. If it fits my system and it fits my criteria, I will trade that no matter what. But my major market, the major market that I like trading is Forex, for this exact reason, where it's just smart money in its purest form. There's nothing that is going to lie to you. If you know your basics, if you know how to operate in the smart money market, you're going to make money in Forex. That's all. So let me discuss the kind of systems that you can look towards making in different kind of market scenarios. Now, some people like trading cryptos or Nasdaq or US 30 or all of those indices. Now, one thing to note about those indices is that they are full of volatility. Now, what does volatility mean? Volatility, to make a system for volatility, you can expect you can expect this to happen. This is volatility. It's going to cut you off, it's going to liquidate that demand zone, then it is going to come, move up, and move. So this is something that you can add to your trading system if you're making one for volatility. Then US 30, Nasdaq, cryptos are a part of all that. When it comes to Forex, it's just pure action. It's just pure smart money. If you enjoy trading, if you enjoy smart money concepts, you're going to have a lot of fun trading Forex, which is what I personally do. And I realize that the Indian markets, even though they do follow all the concepts that I've learned, they heavily rely on sentiments. And even then you can just go apply all these concepts and you can keep trading them. But for me, the best fit in the current scenario is Forex. So you will have to find out what markets you like trading, what markets you're comfortable trading, what markets mm, respect your trading system. It's just that if someone else is trading cryptos, you don't have to trade cryptos. That's as simple as that. And then the further discussion is what we have planned, what smart money is planned for all of you in the future. Firstly, a Discord server, although we do have a private Discord server right now, we are going to make an open Discord server where there will be constant discussions, healthy discussions for fellow traders, other traders helping each other out, fun things like live trading, debates, and those sort of things. Secondly, for future plans, there may be a potential mentorship program. I'm currently working with a close group of traders that I personally know to curate a potential mentorship program that'll that'll include best of what I have to offer and filtering it to only the things that you need to understand about how to be profitable, consistent, and be aware of whatever is happening in the market. Then the most important objective of Smart Money Cult is the main focus, and it's still going to be the same, which is helping fellow traders who are on the path of gaining consistency and to achieve the maximum that they can achieve out of their journey, since we all know how stressful it is in the initial days. So that's all Smart Money Cult is going to do for the future. And wrapping up today's live, I'm open to taking questions from you guys now. If you have anything that you specifically want to ask me, you're free to do so. Anything. From where, Sanskar? That's actually a good question. So how I'll tell you how I came about smart money. I was just seeing a couple of traders on YouTube just take these crazy trades, and it was quite confusing to me to see them see them take these kind of trades. And that's when I started going into resources. There are a lot of resources available online, which I think I'll share a couple of them in the next story that I make. You can just go through those resources, just make your own understanding out of them, then try seeing what works for you, or what you can do to understand smart money concepts better. So I'm going to share a few after I'm done doing this live. Any FX mentorship you would like to refer? Any FX mentorship? I genuinely think that ICT has good content, but if you're looking for a mentorship that you want to cover, I mean that covers most of the stuff. You can just look into MentFX. His free content is pretty good for you to be profitable. Liquidity Hunt. Okay, we'll explain that. Good session. Thanks. Can we join your Discord? Yeah, I think that's good. That's what I just discussed. It's going to be a future plan where you can get into the Discord server and just help fellow traders out. So whenever that is ready, you all will have access to it for sure. Experience in smart money. Do you mean what do you mean by that? When I started trading smart money or what? So you'll have to maybe specify that a little bit. Okay, so since Rahul was asking about liquidity hunt, let's just see an example. Something fairly easy to understand. Wait, this, we'll just see this. Okay. So now if this is your point of interest, if this demand zone is your point of interest and you're looking to take a trade out of this, understand one thing why confirmations and why trading systems are very important to your trading plan. I'm just going to cut this off. You see the price, you see the price approaching your area. What is the first thing that comes in your mind? You're either going to do this. If you don't have a trading system, this is most likely what you're going to do. And what is that going to do for you? This. Now, this is a liquidity hunt. Why is it a liquidity hunt? If you see where your stop loss is, it's exactly here. And there are millions of people thinking the same way that you are and placing your stop losses here, here, here. Some people might take this and put their stop loss here. So all this is just free money for the institution. If you understand what I'm trying to say here, all this, anything below this is just money. And they need this money. Why? In order to make a move up. So this move up could be a move to this liquidity here, maybe some liquidity here, or maybe just take this supply, whatever. But this is a liquidity hunt. This is exactly a liquidity hunt. And how you can how you can avoid a liquidity hunt is simply, if you have a trading plan like I explained, you are most likely going to be shocked after your stop loss is taken right here. And then chances are that you will not look for a second trade since you think it is going to be a bearish order flow from here. You're going to look at this supply reacting and maybe just punch in a short here. This, what you're doing now is you have provided enough liquidity here. Now you're doing so in this area. If you just move on and see what happens next, there you're just going to be taken off from both the sides. There's nothing to it. There's absolutely nothing to it. And liquidity hunt is going to happen. If you're a trader, it is going to happen to you. But how do you combat that? Is you go to smaller time frames. This is why I personally like trading the smaller time frames and then taking it to the bigger time frames. That's how I do it. So what I'm going to do, what my plan of action here would be, I would just go on to the smaller time frames, look for a break here, and then maybe trade off this demand zone, just delete that there. This is the move that you're going to catch then. This is one way you can avoid liquidity hunts, but all you need is a trading plan. If it fits my plan, if the price after bouncing back here gives me an entry, I'm not going to stop myself from taking that. I'm always going to take every entry that I see. And you can see the price very well mitigates this entire zone and giving you a few good entries right here. More than a few good entries before it starts making the move. You can just see it's a 19% move from the mitigation. So that's one example of liquidity hunt right there. Okay, Chaitanya, which is your favorite pair to trade? Okay, so let me take you to my favorite pairs. One is this one, EU. You can just ignore the dirty charts. So one is EU, which I trade every day. You can just see. I love this pair for the kind of low spread it has to offer and the liquidity that it has throughout the day. It's my most favorite. After that is UJ. is USD JPY. This is again one of my favorite one to trade. I don't know why my charts are blank here, but second and third is GU. This relatively has high spreads compared to the other two, but this is a very well moving pair. So I like trading these three pairs in Forex. Does your trading system changes during corrections or days? No, Aryan, my trading system does not change. If if I don't find my entry criteria during a trading session or a trading day, I will not take them. So the trading system is something that does not change. It remains the same. Doesn't matter what the market is doing. Sanskar, as we don't have TradingView Pro, do you think we can trade SMC? Yes, definitely. You can trade SMCs on any time frame. You can now the same. If you see, you can trade this. This is a trade that I took. Although I exited somewhere around here and I was riding a very small portion. You see this demand zone operating off it. Go to 1 minute chart. It's the same thing. It's the same thing as a 5 minute chart. You see this. It's a nice entry. You can go long. So you don't need TradingView Pro, but if you operate on a very small time frame like I do, then maybe you need it. Otherwise, you don't. So that's just how I take my entries. When I started out, I was taking 1 minute entries, the same like what you're talking about. So you don't need a pro version for that. Shrestha. Off late, the spreads are super high. How do we manage our trades? So yeah, that's a very good observation. It's been happening since the whole war outbreak started, and one way to manage that is now if I'm taking an entry on this time frame. Now this is where I've taken an entry. What I will do is I will wait for a structure break to happen. Once the structure break happens and the order flow is shifting in my direction, I'm straight away going to break even. Simple. There's nothing else that you can do about it. So when you're taking those kind of spreads into consideration, your entry is going to be something like this. So there's absolutely nothing you can do about the spreads, but one way you can manage them is just move your stop losses to break even as soon as the price trades through your structure. So that's one way I've learned how you can manage your trades. Anything else that you guys want to ask me? So you guys can just tell me the biggest problem that you face when you're looking at taking a trade or whatever it is. Maybe I can help. Okay. So now to find targets, you just need to zoom out, bro. You just zoom out and you see there's a nice accumulation happening here. It's moving, it tests, it mitigates this demand. You know the order flow is bullish. This is just bullish order flow. What do you do when the order flow is bullish? You don't take shorts. Firstly, when the entire market is bullish, you take the trades of demand zones. And what you do next is you know what this is. This is liquidity. You just mark that as your liquidity point. Okay, you know what I mean. You just mark this as your liquidity point, and this is going to be a first target. You see how when it goes to your liquidity, exactly when it goes to your liquidity, you find such kind of spikes. This is just this your a retail trader. What a retail trader is thinking here is he's going short, and his stop loss is somewhere here. So that's what that is liquidity. That's again liquidity hunt. If you want to call it that, it's liquidity hunt. The stop losses are getting hunted. There, anyone who's going long, they put their stop loss maybe somewhere here, seeing this swing, or maybe here, wherever. So those stop losses are getting taken out. Again, what is this? I just discussed the same thing, that there's going to be major liquidation before there's a move that's going to come. This is exactly it. This, take the stop losses here, take the stop losses here. What are we doing next? We're ready to move. There. It's a straight, after liquidating everything, it's a straight. Some trades on seconds. Okay. Some trades on seconds. I'm afraid I'm going to end up showing my entry criteria to you if I do that, but let me see what I can do. I'll just show you something that I haven't taken yet. So you go to a smaller time frame. What is this? This is a demand zone. Even smaller. There we go. That's an area that you're looking at. And say you want to take a risk entry on 15 seconds. You're just waiting for price to come here. This is a risk entry. This is something I don't take, but just for the sake of an example, I'm going to show you how you can take entries on any time frame. Okay, you're just targeting these liquidities here. This liquidity, then maybe this. Okay, exactly where it goes. There. This is how you can maybe take a trade on 15 seconds. I don't do this. I mean, I don't take risk entries, but Mohammed Faizan, this is how you can take a trade. So if you're taking a trade on seconds time frame, you need to be operating on very smaller demand zones. So you maybe look for a 5 minute demand zone and then refine that area. So on a 5 minute demand zone, you can't take a trade here. On 1 minute, you know this wick has collected enough liquidity for something. Now that something could be a bigger move up, or maybe just maybe a Wyckoff spring or a STNB and then a move up. So it completely depends. So this wick is a demand zone in itself on a smaller time frame, like I showed you. That's how you take a trade on a small time frame. I mean, on a seconds time frame. Minimum capital required for forex. So it that's a very subjective question. If you trade whatever capital you're comfortable trading, but if you want to see good amount of profits come your way, then maybe something close to a $50,000 or maybe a $25,000 account is pretty good. Is it easy to cope up with the profit you got, but a sudden move comes, but you still keep holding it? So, Sanskar, this is exactly what I was talking about. See this. In this case, what happened is once my partials were booked at this point, I know this is liquidity. Once my partials were booked, then the only thing that matters to me is capital protection. I'm simply going to put my stop loss here. It's at break even. It doesn't matter. The trade was right. I made 50% of what I wanted to make on it. Now the only thing for me is protecting my capital. After this, after such kind of a move, after it clearing this liquidity, I don't want my stop loss to be taken out. So I don't want to see any kind of losses after I'm done catching a trade and done making money on it. So one way of simply going about it is just go break even. The the most important thing for you is you need to keep booking your profits. If you don't book your profits, and if you just want to catch this entire move, it's not going to happen straight out. It's going to cut you off here, everywhere. It's going to cut you everywhere. before it actually gives you money. So capital protection is the most important thing. Once you start following that, once you start going break even, a lot of times you'll understand this. So I use IC markets. I use an IC market raw account. Actual moves will come after liquidation. Most of the times, Rahul, most of the times you go open any chart, it's not going to be easy. It's a demand zone is not just it's if this is a demand zone, it's not going to be this most of the times. It's not going to be this. It is going to be this, then this, then you see a break and then it moves up. This is where you get involved. And whatever your trading criteria is, you will get cut off here once. So imagine you taking a minus one, minus one, minus one, minus one. You're down 4 hour. Now this is where the psychology bit comes up. You're down 4 hour right here, and you think you're done for the day, but the demand zone is still holding. What do? You take this one entry and you cover all your losses plus you make much more. That's smart money in a nutshell. Okay, we've been on for about 45 minutes now. And anything else that you guys want to ask me about? Or we can wrap this session up. Yeah, yeah, that's exactly Wyckoff. So I was looking to get a trade off this demand zone, and clearly it never wanted to come and mitigate that demand zone. So this was my second option. I was just looking at some accumulation happening around these areas. I saw a sign of strength here. This is a sign of strength in Wyckoff. Comes back and trades. Sorry for that. So even this is Wyckoff. Wyckoff is everywhere. Wyckoff is just happening everywhere. You go to a seconds time frame. I can just show you an example. It's here. This all this is what this is. All this is Wyckoff. This is Wyckoff. So what matters is Wyckoff around your areas of interest. If it's just happening everywhere, if you just zoom out on any time frame, on anything, it's just happening everywhere. But that doesn't mean you have to trade everything. You just trade Wyckoff that happens around your areas of interest. Now, if this area of interest, clearly, there's Wyckoff happening here, here. This is your first entry, and this is a sign of strength. You can just take it up to where you want it to go. So don't trade everything that you see, but just trade everything that comes to your zone. That's one way of how you can be selective about your trades. So see, in a live trading, in a live market, now what I'm showing you is just hindsight of what I've taken or what I've already marked. But in a live market, when you don't know what is happening, you have to understand that potentially every area is going to be an important area for you. This demand zone, this demand zone, this demand zone, everything is going to be important. But what matters is how the zones react. If this zone is traded through, I know I don't have to take it. So what I do is I just delete that. So my this was my area of interest. Now it is not because it's traded through. What remains is this zone. Now this zone. Once this zone is taken off, if it liquidates this zone, what do you? I'll just do this. This is what is happening. You think this is a bearish shift in the structure. Potentially, you'll be looking to take shots. And what you need to understand is this is my area of importance. And if this zone holds, then why will I be taking shots? But if this entire zone is liquidated, I know I can take shots till this demand zone because again that's my area of interest. I'm going to look for longs in this area. So that's what. So you that's how you get to know your area of interest. Every area is an area of interest according to me. In smaller time frames, in higher time frames, I always check 4 hours. It's a You can see how well these areas hold, and maybe 90% of the times your zones are not going to hold the way you think they will, but that doesn't matter. It's just that 10% of the times when they actually hold and you make money out of it. Can we use indicators called no gap zones while on seconds? Yeah, definitely. So if you notice, I have this no gap zone. I don't use it anymore. Once I started trading the seconds time frame, I felt it was necessary, since this is just dirty price action. If you're new to seconds time frame, this is very dirty, and trading this is a disaster. But once you slowly get used to it, then you know what is happening. So you can use that no gap candle to get started with. It's pretty good. So okay, I think that's it for today's live. If there's anything else, you guys can ask me now, or maybe keep it for the next session. I hope this was helpful to you guys, and I hope that you guys are looking forward to tomorrow's trading session, just like I am. Thanks, man. I'm glad you liked it. I'm glad you found something useful. No problem, man. All right. Thank you guys so much. I will just post this video on YouTube if you want to refer to it in future. All right, bye.